I'm Matt Bishar with NAREIT's REIT.com here at the St. Regis Hotel in Washington, D.C. for NAREIT's Washington Leadership Forum. Joining me for this CEO Spotlight is Michael Landy, President and CEO of Monmouth Real Estate Investment Corporation. Michael, thanks for joining us.
My pleasure. Thanks for having me.
Now, Monmouth recently reported record quarterly results. What is driving such strong performance?
Well, demand for high-quality industrial properties continues to be very strong. We've positioned Monmouth to benefit from having broad linkages to e-commerce related activity, and today we're seeing the fruit of our labor. We're 99.5% occupied, our leasing spreads are positive, our tenant retention rate was 100% last year, and this year is shaping up to be 100% tenant retention year again. So given the increased online spending, I anticipate very strong demand for modern industrial buildings for the foreseeable future.
And Monmouth's also expanding its acquisition pipeline. What are you seeing in the market that's making this a good time to acquire assets?
Well, what we're seeing, Matt, is something we've been speaking about for quite some time, and that's the continued shift in consumer spending habits. Since the turn of the century, the U.S. economy has been growing at an annual rate of only 1.7%, but e-commerce has been growing by leaps and bounds at an annual rate of 15%. All of the world's goods are available via the internet. This makes shopping online incredibly efficient. From a real estate standpoint, the industrial property sector has a lot of merit and benefits and future potential. So for Monmouth, it's a very exciting time, and it's presenting us with tremendous opportunities to grow our company.
Lastly, Monmouth not only maintained its dividend during the financial crisis, but you're actually one of the few companies that's actually paying a higher dividend now than prior to the crash. What is the importance for you in terms of the company's overall investment proposition of its dividend, and what do you think it says about the company as a whole?
Well, dividends, as you know, are a big part of the total return proposition. As they say, dividends are facts and stock prices are opinions. Because REIT dividends have represented 2/3 of the total return, they've been a key factor in the outperformance that REITs have generated over the long term. At Monmouth, we only invest in buildings leased to investment-grade tenants. Therefore, we deliver a dividend that's secured by very high-quality income streams. We've maintained or increased our dividend for 24 consecutive years now. We recently raised our dividend 6.7%. Retail investors love our dividend returns because they've proven to be very reliable. As you mentioned, we performed extremely well even during the Great Recession. So today, our dividend is yielding approximately 50% more than the average REIT dividend. And therefore, in my opinion, Monmouth shares represent tremendous value today.
Great. Michael, thanks as always for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.